Welcome back to the Dividend Diplomats YouTube channel. You've got Lanny here and you've got Bert the Herd over there. We aren't in the same room, but we're still trying to bring that dividend energy to all you viewers and watchers and dividend investors out there.
Yeah, everyone, you know the drill by now. Smash the subscribe button if you're not following us, and give us a thumbs up on this video so we can just keep bringing you high quality dividend investing videos, news, and whatever we can to your YouTube feed. And we're pumped today because even though we're not in the same room as Lanny said, we're about to bring you our first remote dividend stock showdown today. And we are excited to talk to you about these two companies.
Thanks, Bert. And yes, we are in quarantine style right now, still trying to bring you content the best way that we can. Give a prop to Bert right now for pushing through this. Give him a thumbs up directly, Bert. So thank you.
Thanks, Lanny.
So yeah, as Bert said, we're going to talk about two pharmaceutical giants. And no, we're not talking about Pfizer, Moderna, Johnson & Johnson, Glasgow, AstraZeneca. We're not talking about any of those pharmaceutical companies. We're actually talking about two other big pharma companies that really are involved with, supplements and treatments of diseases that are out there right now that the world is still fighting. And we can't wait to dive into these two big pharma companies right now to see which is the best dividend stock to buy between the two. And the funny thing about the two is that they're fairly related when you actually look about where one originated from.
Oh yeah, that's what's going to be the fun little twist we have here in this video. But before we bring you the two companies, let's talk through how we go through and run our dividend stock showdowns and compare all of our dividend stocks when performing stock research. We use the famous Dividend Diplomats dividend stock screener. In case I'm sure a lot of you actually know this and have been following us along now, but for all of our new followers, our new viewers, and new subscribers, we use three simple metrics to evaluate stocks before investing. We compare their price to earnings ratio to the S&P 500. We then compare the dividend payout ratio to make sure it's less than 60%. And we evaluate, thirdly, the company's dividend growth history and their dividend growth rate. And in these showdowns, we always bring in a fourth bonus metric, the dividend yield. And we always wait till after we run the first three and save the dividend yield for last. That's the fun part of these analyses.
And yeah, Bert and I, we were wearing the same exact thing. This is COVID, this is quarantine style. So we're not here to change outfits or do different days. We're here trying to pump in as much content as we can while Bert has his energy and the sun will fight. So quarantine style, dividend diplomats, Bert and Lanny, we're getting this dividend battle down on the road regardless.
So is it time to announce the companies, Lanny? Is it time to announce who we're representing in the wrestling ring?
Let's bring out entrance number one. Bert, you got
this. All right, so for number one here, I'm going to be representing Abbott Laboratories, ticker symbol ABT. And Lanny, what about you?
I'm going to be the king to your taker. I am going to be Abbvie, ticker symbol ABBV. We call these two the brothers of destruction, or the dividend pharmaceuticals of destruction here.
Yeah, and what was funny is Lanny mentioned that these two companies have an intertwined history from the past. That's because not too long ago, they were the same company. In fact, there was a spin-off in the early 2010s where Abbott spun off ABBV into its own company. So that's the roots are always there between the two. They're going to be related. One company is the higher dividend yielding company, and the other one is the lower dividend yield. But that's what's fun about this is we're going to see the metrics. It's going to be a little different than what you would expect from those two dividend yield scenarios that I just laid out.
All right, Bert, let's jump into the dividend stock metrics. The price to earnings ratio. How does Abbott look here?
Yeah, so at the time of this recording, their price is $108.35. Their earnings are $4.40. That gives you a PE ratio of 24.63. So the market is currently very high right now. The stock market's trading at 35 or higher. I don't think I'm going to be shocking any of you by telling you that. However, historically, the stock market's trading between 18 to 20. So the PE ratio is low compared to today's current market, but it's a little higher than the historical market standards. So what about Abbvie? Come on, Lanny. What are you seeing?
Well, yeah, you're right. Definitely a little higher because, in the pharmaceuticals, when we've covered Pfizer and Johnson & Johnson, 24 is a little bit higher than them. So a little bit higher than the industry for Abbott. So ABBV, latest stock price is $103.26. and their forward earnings are looking at $12.19 based on analyst projections. So this equates out to a significantly low price to earnings ratio of below 8.5, so significantly lower than Abbott Labs.
All right, well, looks like I lost that first bout, so let's move on to the second metric here with the dividend payout ratio. Typically, we look for stocks that have less than 60%. We've also talked a lot about how we think a perfect payout ratio is between 40% and 60%. If that's the right balance between a company reinvesting in its earnings, reinvesting its earnings in the business, and rewarding shareholders with a dividend. So Abbott pays a $1.80 dividend. So you take that compared with its earnings of $4.40, and you get a payout ratio of 40.9%. So right at the low end of our perfect payout ratio. What about you, Andy? So what are we seeing with Abbvie?
Well, that's a pretty hard metric to beat, to say the least. So with ABBV, their forward dividend right now is $5.20. So you take that over the $12.19 projection, and that dividend payout ratio is slightly higher than Abbott Labs, but it's still at under 43%. So both companies here are in that perfect dividend payout ratio range of 40 to 60%. They like to grow their business, but still reward shareholders. As you know, R&D is huge in big pharma. So you need to keep pummeling dollars back into the business to find a new type of treatment, whether that's a vaccine, a treatment, a supplement, some sort of prescription. So they're always trying to reinvent something else.
I mean, it's great that they're also in the perfect spot. So this is pretty much a draw here for the two companies as well, considering both of them have perfect dividend payout ratios. Moving on.
Stock number three, dividend stock metric number 3.
Yeah, let's do it. So this one's going to be a lot of fun because it's where we look at the dividend growth history. And for this, we typically will look at how long a company's been increasing their dividend and their average dividend growth rate. So first, let's just start with Abbott, because we just featured this in one of our last videos. They just announced a wallop of a dividend increase in the beginning of December. They increased their dividend by 25%. And yeah, that was just their last dividend increase. It was their 5-year average going into that was about 8.5%. So this was significantly higher than their recent average dividend growth rate, which was great to see, and continued the trend of strong dividend increases from the pharmaceutical sector. And with that, that was actually their 49th consecutive annual dividend increase. So they are knocking on the door of becoming a dividend king, which is a company that has increased its dividend for 50 plus consecutive years. So the company has a strong dividend growth history. They just announced an amazing dividend increase in 2020, and they have the longevity as they're about to be a dividend king.
Nice. That's going to be hard to beat. Abbvie, they didn't come in with a 25% increase, but they did announce a 10% increase this year. So from a dividend growth rate standpoint, they average over double digits. So their increase was actually lower than their 5-year average of almost 19%. ABBV was really pumping that dividend up since the spinoff. So I'm wondering if now that dividend growth is going to slow just a little bit, maybe in the upper single digits to low double digits going forward. And now the growth history, how many years, is always a subject of debate since they, spun off from Abbott Labs. Some still say they have the 49 plus years because they're just, part of Abbott. Some will say, well, they've only increased their dividend for 7 straight years. So either which way, they have a growth streak that hasn't been broken.
Yep, I think that's the important point to take away from there. They didn't miss a beat, and they continued increasing their dividends since the new company. They were a new company, just like the old company.
I mean, these companies, as Bert has talked about, like Abbott Labs has your brands of Similac and Sure, Pedialyte. I know Bert drinks Pedialyte every weekend, trying to recover. Bert.
Yeah. Hey, whatever gives you that energy. I should probably go start slamming some Pedialytes right now.
Probably should. ABBV has the popular drugs of, Humira and a few cancer treating and HIV/AIDS treating treatment pharmaceuticals. So, more in the treatment of diseases, ailments, et cetera, is what ABBV is. And, Abbott's more of a lot of products that you can, go into your store to buy. CVS,
Yeah.
Walgreens, name it.
Yeah. So now we have our bonus metric here, the dividend yield, and this is going to be, you're going to see a big difference. Lanny's already celebrating, so I'll just rip the Band-Aid off. Abbott's dividend yield is 1.6%. It's right in line with the S&P 500. But all right, Lanny, I'm done talking about Abbott's yield, so why don't you just move on to yours, because we know where this is going.
That's amazing that it's only 1.66% for Abbott, but ABBV comes in and really hits that Hogan leg drop, the Stone Cold Stunner, and the dividend yield for ABBV is actually over 5%.
Wow, that is insane. So let's just do a quick recap here before we give our final conclusions and our final concluding thoughts on which one we like better. Abbott, their P ratio is 24.6. They have a dividend payout ratio of almost 41%, a 5-year average growth rate of 8.5%, although they did just announce a 25% dividend increase. They are about to become a dividend king. They're 1 year away from that, and they have a dividend yield of 1.6%.
ABBV comes in with price to earnings below 8.5, payout ratio below 43%. Dividend growth history is there. The average dividend growth rate is well above the average rate of inflation in the double digits. They had a 10% dividend increase this year, plus that cherry on the top with a dividend yield of 5% plus is very ripe right now for investors out there looking for a pharmaceutical to add to that dividend stock portfolio. So I think the question is, Bert, out of these two dividend stocks, which dividend stock would you buy right now for your portfolio if you had to? Or if there's another dividend stock to buy that you're looking at in the pharmaceuticals?
Well, what I'm probably going to be doing here is I'm going to be switching my allegiances here. I'm going to be taking off the my current jersey and pulling out. You'll see underneath that NWO shirt that's underneath it, because I'm going to be joining Lanny's side here and picking AbbVie. If I had to pick one of the two of them, I mean, the PE ratio is so much lower than Abbott. The payout ratios are the same. I mean, the dividend growth rates are phenomenal for both, but clearly AbbVie is significantly higher in the short term. In terms of the dividend yield, it's not even close. And I consider the dividend growth history negligible for the reasons because of the spinoff that we talked earlier. What about you, Lanny?
I mean, that's a great question. Great point. I think a lot of investors are afraid about the reliance on one or few items that ABBV has, which is probably why they trade maybe at a lower valuation due to the Humira reliance. But it's hard to beat these dividend metrics from ABBV. If you've owned them over the last 7 years, you've probably done very well. Experienced dividend increases, stock appreciation. So yeah, I mean, I would have to tip my cap that ABBV, if you need a pharmaceutical in your stock portfolio, that this is not a bad stock to buy or stock to add to your dividend stock watch list. In a very booming stock market right now, ABBV shows clear signs of undervaluation in the price to earnings ratio relative to its peers and the overall S&P 500. So yeah, it's good. But yeah, the question for, what do the viewers think? Who do the viewers like in the pharmaceutical industry?
Yeah, let us know what you think. Leave the comments below. And if you don't like these two and you like another one, let us know instead. We're excited. Or if there's another pharmaceutical showdown you want to see with two other stocks, let us know. We can do this all day. Just keep giving us companies and we'll keep doing some analyses. So everyone, again, if you don't follow our channel, please subscribe. We have appreciated all of our subscriber growth and all of this as we continue to push towards 5,000 subscribers. And don't forget to give this video a thumbs up if you liked it.
This is Bert and Laney from the Dividend Diplomats. Over and
out.